Hello, everyone. Hopefully, you're all doing all right on this fine Sunday evening. Can I get a quick little sound check just in chat, making sure you guys can hear me and see my screen? Awesome. Well, I hope y'all had a very refreshing weekend. I know I did. Taking some time off the charts sometimes help. Being traders, we can get pretty compulsive. I'm talking for myself here, but just in general, we tend to focus on this and be in a 200% effort in this task of conquering the markets, right? But you have to take some time off, you have to breathe, you have to take breaks. So make sure that you keep your weekends for that, but also for studying. Talking purely about what happened last week, we had a very, very big week, right? US presidential elections. We're not going to go into the politics of it, but just looking at the markets, we had a very huge expansion week, right? What was it? 6.5%, 1,300 handles. So not that big in comparison, right? You've seen some similar moves, but very one-sided, very bullish price action that brought us all the way up to all-time highs, taking out these highs, and now having reached said liquidity. It is definitely not the most certain of times to be trading, but I'd be quite happy, especially with all the inflation data that we're going to have, the interest rates data, CPI, PPI that we have this week. I hope will bring much needed volatility to the markets after such a large range. And we'll be careful, especially early on in the week, for some consolidation, some high resistance retracements lower. I am going to just bring this little picture I took, just a part of a screenshot from our seasonal analysis that you can find on the Rise Statistics app, looking at seasonal ranges for NASDAQ specifically. As you can see, starting this week, which is the next point on our chart, on our green is our 5-year average. You have 10-year average, 15-year average, and all-time average. You see retracements, short-term retracements following a very aggressive expansion, right? You can see even just from this small screenshot how close we have been in correlation with seasonality. This is how I personally use seasonality. Disregard it if our year to date is far from it, which is the red line you see right here. This is our current year to date. If we are near seasonality, I disregard bias, I disregard everything, and utilize seasonality to understand trending conditions. When we are going to be trending, when we are going to have very one sided price action with very little retracements, right? Just very low resistance, as we'd like to say. This is when we are near seasonality, and this is where my only trades I will be taking are long. Now, in this very specific case, I'll expect a short-term retracement lower and hopefully a continuation higher. But taking into consideration the specifics of election year and our current monthly range of 1,300 handles, I'm going to be slightly more careful. Now, if you want more data, I'd suggest heading to the Rise Statistics app, going on our ranges analysis, and head over to the monthly time window. Use percentages or points, whether you want, and analyze the average ranges, right? Establish levels where you would normally anticipate this candle to form, right? Average manipulation, average distribution. And this will grant you a little deeper insights into what I expect for the whole month. But that's getting ahead of ourselves. Only the third week of the month here, and let's see what we expect. What do we see on our chart? Well, finally, we reached our objective. We cracked all of this SMT that we had, meanwhile going up from ES taking out this similar level. I don't even know, a lot of time ago, 19th of September. So a month and a half pretty much before. It's definitely a lot of stuff there, almost 2 months actually. A lot of time. All of this SMT was invalidated, taking out finally this liquidity. As I said, I will anticipate a continuation to upside. But what will I do first? As we frame with our seasonality, I will look for short, for retracements into our range. But that's pretty vague, isn't it? Retracements into a range. Okay, well, what range? Well, my latest expansion. So a range for me is from a swing point to a swing point, which is a very simple pattern, right? That's known in multiple different logics. Some people call them pivots, some people call them swing points. We're looking for a 3-candle pattern that formed a low. So low, the low of this candle is lower than the low to the left and the low to the right swing point. To the highs, we don't currently have a swing high, so I'm utilizing the current high, anticipating that this will form some sort of daily swing point. Due to the fact that we are extremely bullish. How do I know that? Well, in 3 days, we have done the same movement that we had done previously in, what was it, 2 weeks? 1,300 handles? Not even, right? So you'd be looking even further here. So that's pretty much all of October's price action and half of September's price action. So we had a very aggressive move to the upside. I'm now going to anticipate a smaller retracement due to the fact that we are very bullish. And hence, since we are very bullish, I don't need it to retrace to a discount of this range. I always use the same exact logic for defining these things to be precise with you guys. I don't need it to retrace to a discount since it has shown me just by looking at the very specific candles. And if you want more specifics, a more mechanical approach to it, just look at how aggressively we close through old liquidity, right? No matter where we want to look for it. Compare this to this. We barely closed above and then retraced lower. Okay, but here we closed above aggressively or a wide range above and continued to close above. So now I'm going to look for the same things at these levels, right? Are we going to basically revisit that level one more time? But I'm at least anticipating a retracement to this fair value gap. The point I'm trying to make here is that I am not necessarily going to be expecting it to go all the way down here or even all the way down here. I'm going to be looking for a retracement into a range, right? To start the week, to start the weekly power of 3. Think about our candle. I want to see open. I want to see a low form so that we can expand to a high. Now, it is very possible that after making this move, we would form, I'm forgetting the name of the pattern here because I don't utilize the pattern, but I remember seeing it on Twitter today. We could form I think they call it a double purge now. I'm never good with the new names they bring for things, but it is something that is very simple in market mechanics. We are going to purge liquidity once, purge it again, to then reverse. We could anticipate some more aggressive moves to the downside, leaving seasonality, taking into consideration the very aggressive move to the upside we had. But my first and only plan for the week will be to look for retracements lower, possibly all the way down to here. A key point of interest for very high probability longs will be within this fair value gap that we have here, aligning with this old swing high we broke. This is an area I always like to look for. Old important points in structure overlapping with points of interest, higher time frame point of interest, of course. This is an area where I'll be looking to take a long continuation higher. Up to then, I'm going to be taking shorts. When do I decide that now it's done? Now the reversal's there. Well, as always, I need a few different things. I need important liquidity being taken at a key time, so during a key session on a news release, for example, and I need SMT to be present. These 3 criterias frame all of my trades, all of my ideas, and are required for me to have an entry. I just utilize them in different charts to get to different results in distribution, right? Analyze price action, look for a reversal, trade the distribution. This is a little bit different than we usually do it. But seeing as these are not regular times, right? Let's actually look back. I want to take a second to truly make sure you guys understand the logic behind it, because there's no value in me just telling you where I think it's going to go. And yes, just revisit my YouTube, look at my previous outlooks. The consistency is unmatched. All right. I don't want to make a Twitter post about it because that would be arrogance, but I am very consistent with these. But that doesn't help you guys. There's no point because at some point you're going to miss it and then catch back. But if it doesn't come from you, then it's not the same. So I want to make sure you guys understand the logic I utilized, a very simplistic approach that gives you consistent results like this. So let's look at the last time we had a very aggressive move like this. Okay, right here, very aggressive move to the upside. Where else? Well, right here. Right? I am drawing these with no precision at all. So disregard the precision of it. Just think about the movement. Aggressive movement higher, aggressive movement higher. But we had two different reactions. Here, we retrace very low, all the way back to an old new week opening gap. But more specifically, if we look at it, look at this range, we retraced to our first discount in efficiency. Did we respect it? No, right? We went just a tiny bit below it. And now with the different colors, that might be a little hard, so I will remove these very quickly. We did not, but this was a volume imbalance technically on the daily. Trading back into it, spiking out of it is to be allowed. Let's just look at it. We had a deep retracement. Concentrate on the move. So big expansion, deep retracement, followed by a big expansion and no retracement. Honestly, you can call this a retracement if you want, right? But I wouldn't frame this move as a retracement or perhaps a very small retracement, right? Where did we retrace to? Now, this is not something I like to showcase just because of how not often it happens. But when you have two overlapping wicks like this, you can utilize an implied fair value gap. So you can use that to say, you can say, oh, well, look, it revisited an old high that it broke. And that's what I like to think. And so now, after consolidated, I know we are ready for another move. We expanded aggressively, but we have also reached an important objective. So due to this, I don't know if we're going to retrace barely into this, all the way here, all the way down, or completely a reverse. But what I do know is that my high probability opportunities to long will be here in this area. Because in the past, whether we had a small retracement or a deep retracement, the areas of interest were old highs. Well, in the case of a bullish expansion, right? So old swing points or your first discount in efficiency. It is that simple. That specific logic frames my bias, frames my understanding of the charts every single week, every month, every day. I did want to showcase it in a little more detail. I've been going back over the recordings of these live events, and I feel like there are areas where I could go deeper, but I stopped myself to try and keep it simple. The truth is, trading is not simple. And if you're in this Discord where I barely do any advertisement for and we have no other form of advertisement, it's because you want to know how to trade, or you're possibly already a trader, just looking for either confirmation or someone to have a different opinion so that you can think, it makes you think about your idea of the markets. Whatever reason you are here for, I feel that it could be valuable to provide a little more reasoning behind my ideas. So I hope you guys appreciate that. But other than that, it is a very simple outlook, and I'm going to be waiting for CPI to tell me. And remember, guys, CPI oftentimes runs on side with price. So am I going to be expecting a manipulation specifically at CPI time? No, not at all. Do we have any questions in relation to what was shared? I am going to bring back just this little seasonality thing because I am going to use it for the thumbnail. Gotta bring my shameless plugs where I can. And if you have any questions to it, you now have a visual support. I don't see anyone typing, so I'm guessing it was all clear. We don't get a lot of questions here. I don't know if that's a positive thing or a negative thing, but I'll take it positively. The only way to. Awesome. Thank you for the confirmation, Stan. I appreciate that. Even though your clown PFP is kind of scaring me right now. Thank you all for your time. I appreciate you guys being here. I hope this is providing value to you all, and I wish you all the best of training weeks. Definitely excited to get back in the game now that elections are over. So I wish you all luck, and we'll see each other on Wednesday, Thursday, and Friday for price action reviews. So it's going to be a very packed week full of value. You guys have a great night. See you all Wednesday.